Good evening. Ira Epstein of Linn Associates with your metal market wrap-up. And this wrap-up is for Monday. And we're now at the 19th of April, 2021, about 6:20 p.m. Central Time. So as we're looking at the markets, the gold market's just hanging here into the 1770s now. Now it got up today, made a run for the upper Bollinger Band on Friday. Again today, you know what happened after that. That's why I tell you to take that enhanced Bollinger Band course on our website under the word education. Silver market up a bit, but it too's having its problems. The market that had no problem today was the copper market. It just soared. That's the best word that you can use. It too's getting ahead of itself, don't get me wrong, but it is the powerhouse. I'm beginning to think the 450 to 475 level's the next target area up there. Dollar index down rather hard, but I think the dollar's into major support. I'll show that to you in a minute here. Energies are waiting for tomorrow's report on the API, and then we get the EIA numbers. And as for economic data, we don't really get very much out of the United States until Thursday morning. So nothing big scheduled from us. You'll get some Red Book sales and things like that, but that's not big data. So we have to wait for the housing numbers and the like later in the week. Now, excuse me here, as we come over to the market, on the weekly area chart of closes, I've been telling you I think the resistance is going to be the first challenge of the 18-week moving average of closes. When the market's under it, the bias is down. When we step over to the daily chart, you can see how you lifted up and away on the marketplace. You have a pattern of a lower low and a higher high. Is that a trend? No, it is not. We've had a heck of a run, but it's not a trend. Support's all the way back at the 1740.5 level. If the market were to just rally on this, I'd say the 100-day moving average of closes at 1806.90 would be a resistance point. Bollinger Band right here. Now, you stay within the Bollinger Band 95% of the time. I have my own theories on it. People are writing me on our YouTube channel with their theories. They're not wrong. It's a theory, okay? Do I know? I know what I know, and I know how I apply it in the futures markets, and I'm more than comfortable about it, and I don't want to argue with it, okay? And the reason I don't want to argue is I like what it does the way I'm doing it. Now, am I being stubborn? Absolutely not. Show me the results of the other. I don't think that it'll beat what we're talking about. When I come to the pattern here in the Bollinger Band, you got a lower low, higher high. My theory, mine, is that you only stay over the band 5% of the time, which is John Bollinger Band's theory, and then the market can change and either ride the band or break away from it. That part has a big difference with what I do. And what I do with all these is I tie in momentum of the slow stochastic. So what the slow stochastic has done is it's embedded until the red line closes under 79. I view the pullbacks in the market are going to be bought by the pros still, looking for another challenge of that upper Bollinger Band. Get under 79 on a closing basis, and I think you'll be back at 1740.5 lickety split. That's what I think. It doesn't mean I'll be right. So I don't have the gospel. The gold-silver ratio, well, silver ratio actually fell under the 18-day moving average of closes, which means silver is gaining dollar-wise on the gold market. You can see what it's doing right there. The smaller the numbers, the fewer ounces of silver you need. But silver's chart is not pretty. You have a lower low, a higher high. When we were over here, we were talking, what would the market do? If it rallied, you had your first resistance point, and we were back here when we were talking about it. The 18 and this gray, the 200-day average, would we get a bearish crossover where this number gets under that? And you can see it did. But that didn't impact market, it's going up. The next resistance is the 100-day average, and if you can clear everything, the next one is the Bollinger Band. After that, I don't have another one above the market. That doesn't mean anything to me. What did the market do? It went up to the upper Bollinger Band, and this was Thursday of last week, and it stopped. Then, to make matters nice on Friday, the market finished at 26.10.5, literally right $1 over the upper Bollinger Band. Will it pull back in it? Market did it right away today, and what should have been resistance, the 100-day average, that's support. And if the market keeps falling, the next support's the 200-day average. So that's how I look at the markets. What are they doing there? But I'm telling you that what I'm looking at is you don't have an embedded reading. So I see an overbought market, unlike the gold, in these layers of first resistance, now support. Copper, I've switched gears and I've moved to the July contract. You have a lower low, higher high, overbought scenario, not embedded, so why not just make the move now? And that's what I decided to do. In the platinum market, you have a higher high, then you made a lower low and you're coming back. So it's moving in waves, up, down, back up. If you think you can catch that, God bless you, have a good time with it. When we come to the palladium market, this is called running that upper Bollinger Band. This is one of my takes on it that's different than a lot of other people's. And as long as you're doing that, the market is not letting anybody in. What do I mean by that? You can buy it. Anybody can buy, anybody can sell. This is America. You can do whatever you want. And the question is, do you want to be buying when the odds favor the market's going to be pulling back into the band? Some people do. They'll say, you know, I realize that, but the band's still moving higher and prices are going with it. Okay. But I view it that more times than not, you get a better opportunity in the price elsewhere if you still want it. You do have the embedded reading, so that's bullish as can be, and you're at an all-time high price. So trend up, bias up, momentum up, the stories are up, everything's still bullish, but it is over the Bollinger Band. Get a hard break, and that's when I think you'll see the pros step in. Dollar index. Today you fell down to the combination of the Bollinger Band in black, the 100-day average. I think the pros covered their shorts. Now, I can't tell you if they covered all of them, what they did. Are we embedding where you get both numbers, the blue and the red, going sideways under 20 for several days in a row? Well, it certainly did it today. It did it on Friday, and it did it on Thursday. So until it's lost, you have that embedded reading, which to me tells me on the rallies, the pros are still going to sell the dollar, seeing how deep is deep. And I know you'd tell me, oh, it's oversold, and I'm saying it's getting stronger as it's breaking. So that becomes the difference. We saw over the weekend a pretty wild action happening in the cryptos, be it Dogecoin, be it Ethereum, be it Bitcoin. They all were pretty wild. You were down in the market today 10.38%, so that's a pretty good drop. Once the market left the upper Bollinger Band with an outside day down, it decided to correct. More important to me is what did it do with the slow stochastic? That's what it's all about. So do I think you're going to hit the 18-day moving average of closes? I do. And you decide from there what to do. The key is, are you going to lose? Are you going to take this out or not? You are correcting. You're overbought now, so you need to rebuild the momentum to figure out what your next step is going to be. You know, one of the things that I look at during the day, and I don't know about you, is I watch something called a pivot point. Now, what it is a pivot point looks at the day before's range, the open, the high, the low, the close, and there's a formula. We teach it to you in the 3-part video that is free to you. You get to figure out where the 2 resistance points are, the 2 support points. Got that? They'll be called R, they'll be called S. You can go back and forth, sell points, buy points, you can call them whatever you want. Then the next thing that I do with it, which a lot of people don't do, is I time momentum. I love to time momentum to indices. Why? Because I've discovered momentum often moves before price. And since I believe that, I'm looking for an edge on price. I put it together in a 3-part video series for you. It's free. Gives you an idea how I teach as well. just go to our website. You can sign up for it right there under free offerings. You can call my staff. They'll get it right out to you while you're on the phone with them. So it's that fast that we'll get it to you. Again, it's free. You can also look at our other offerings and take it from there. In the meantime, I'm Ira Epstein. I'll see you with my other videos in a moment or two here. You have a great evening.